Hey boys, we're going to look at Injective today. I see a couple of different models that are playing out right now. We can have a look here at the high time frame. So if we go in the 3-day, you can see there's a bit of a market maker sell model building where you have your original consolidation down here. You have your accumulation 1 and your second accumulation below these highs. So you have basically a whole liquidity pool engineered in this range, 1, 2, 3, and 4. So at any point, this could spike up and take that liquidity, and it would probably be a cascade up. So I don't know where this would end, but the idea is that there will be at some point a raid, and the composite operator who accumulated here is probably going to be offloading their last bit of coin over there. So ultimately, the way these work out, they're supposed to be then in distribution mode on the way down and doing something like this where they raid these lows, redistribute here, and then finally take the original consolidation out here. So that's on the high time frame. If we jump into the 12-hour or the daily, let's say the 12-hour. So on the 4-hour, I actually posted this earlier on X, but the idea is the same here. You have a liquidity rate here in this internal high. This is the real external high, but in this particular MMSM, you can see there's an original consolidation here, level up 1, 2, and then the raid. And then you can see it drop down, took this liquidity in the range here. And all this is engineered, right? So all these failed swings are going to be targets on the way down. So there's your drop, break of structure. And I had this mapped out well in advance, so it didn't go exactly where I had this plotted, but eventually I think these lows right here are going to get juiced. And then you probably get some kind of mean reversion pump into an area of interest. So ultimately, I think it's going to end up in this range around $5, just below these lows. And that's going to be my final target before big push up. Now in this range, I'm actually going to be looking for a long. So I think you could maybe scalp this low whenever it comes in and takes these equal lows. It's going to be entering this large daily imbalance, so maybe it's a bit early to just jump in. Like, don't catch a knife, but 630 to 668 is a pretty wide spread. So I'd let this base before I actually get in. Let me get rid of this. So the idea behind this long is you obviously have this imbalance and these lows as a target, so the draw is down, especially with the breaks of structure and clearly lower highs, lower lows on the way down. The reason I have these areas set as the entries is if you go into the 1 hour and you just have a look at those original clusters before they ran, you can see if we mark out from this wick high to here before it started to really push up, this is your point of control. So within this range, this is the area that's supported by volume. And you can see when you go right, it's exactly where it pivoted here and ran up. So I've marked it out here as cluster POC, and that's for that one. Second one is this cluster here before a big push up that broke structure and continued to run. So I've added that one in here. So those are the two volume-based areas of interest below this imbalance. And that's why when we zoom in here, I've got my bid set essentially. I'm going to bring this up just a little bit. So I have my original bid set there. I'm going to have another one here and a DCA here with about 2.5% from that DCA to the stop. So it might be a little bit, so it's 3%. That might be a little bit tight if it gets down there, but I really think it's just going to decelerate in this range right here. And then start catching bids and doing something like that. So let's see how this ends up, but that's more or less my setup for the long. Now the targets to the upside. You have all this is going to be all of this is going to be targeted on the way up, and then same thing here. These are all open highs, so ultimately I think these highs are going to get taken, and you have equal highs right there, and it's sitting under a daily balanced price range. So basically this vector candle here and then this one right here, where they overlap, that's your BPR. So ultimately when you have a BPR or a major daily imbalance or high time frame imbalance right above equal highs like this, when this does eventually reverse, this is going to be the draw on liquidity. The other last thing to point out here, I've been using this more recently. I know that ICT traders, they use the OTE, which is the 618 to the 786, including the 705 fib, but I'm starting to look for more deeper value entries just because I've been entering early a lot, and I find that a lot of my positions, because I enter early to manage my risk, I have to bring my stop up and then I get tagged out. So for this one, I'm actually using the 786 and 886 for my OTE, and I'm going to be using that especially when it's in confluence with the volume clusters that I'm going to be trading off of. So that's the injective trade. Hopefully you get a good long and a short. This is going to be the long, but again, I'm taking it to the BPR, and that's where I have a fade set up where you have basically this final liquidity arc going into the BPR, and I'm just going to reverse the trade there because you see there's an untested order block in the range. So I believe somewhere in this area of interest you're going to get a nice sell-off. So just marking an alert there. All right guys, cheers, have a great day.